Welcome to Ask the Expert, brought to you by the Quinton Insurance Protection Team. Get your free no-obligation quote now at quintoninsurance.com or call 1-800-454-1970.
Good afternoon, everyone. This is Gordon Quinton, president of Quinton Insurance. I want to first thank all of you for your continued business. And as always, if you ever need anything, please feel free to call or email me anytime. I'm so excited for our Ask the Expert call today. On our call today is Jodi Weeger. Jodi, I'm sure some of you have had the pleasure of meeting already, and she's been a huge asset to our team, taking away a lot of pain for our clients and making their audits go a lot smoother. And at the same time, being able to save everybody some money and making sure everybody gets properly classified. So what I've asked Jodi to do is put together what I call her 7 secrets of, 7 secrets that insurance companies don't want you to know about. A lot of people don't realize that, insurance companies make a lot of money on audits, and that's why it's so important that you do your homework and your due diligence to make sure that you get really prepared for these audits. And Jodi's going to share with you today her secrets on how you can save some money and make your audits go a lot smoother. So, before I bring Jodi on the call, I want to give you a little bit of background on Jodi. She grew up in a small town, Potsdam, New York, big hockey town up there in Potsdam. She's lived all the way over in New York, North Carolina, as well as out in California. She's been a California girl, and she's been a certified audit specialist for the past 15 years now. So, in that time, Jodi and I were talking. She told me that she's seen it all. She's done audits from a one-man person company all the way up to a Fortune 100 with over 50,000 employees. So she's got tons of experience. And without further ado, Jodi, welcome to today's call of Ask the Expert.
Well, hello, Gordon. Thank you for having me.
Oh, we're so excited to have you on the call. And like I said before, I want to thank you for everything that you've done for our clients. Our audits have never been better. Our team is so happy with everything you've done. And I appreciate you jumping on this call with me today so that we can, share some more knowledge and expertise to, make our clients' lives better and hopefully save the money at the same time.
Wonderful. Pleasure is all mine.
And Jodi, as we go through this, feel free if you want to throw some stories out there too of some real life examples that you've had with clients and stuff like that as we talk through this, because I think that's always the best when people can relate to a specific scenario that maybe they've had in the past or that you've seen. And that's always been the best for me. It's I always take the no BS approach, layman's terms.
Yeah, I've got a few stories.
So Jodi, let me ask you this question before we get started. Based on the thousands and thousands of audits you've done over the year, what percentage of audits do you think that business owners are overpaying because they don't accurately prepare for the audits? Or the other side of it is maybe they just don't know.
I think it's a little bit of both. I think a lot of insureds don't know what the records are. I mean, they have, it's like speaking a foreign language to somebody. They don't know what a state 45 or a 940 is. And then on the other side of it, they're just like, let's just get this stupid audit over with and move on with their life. And they don't check the records and there's mistakes. And I mean, a premium could be $20,000 and it really could have been 12,000. So, I mean, educate the insureds and make sure they know how the audit process works.
Yeah, I think that's great. And look, as a small business owner myself, I know that, we wear so many different hats, all the way from, janitor to marketing to CEO. And time is such a precious commodity as a business owner. And like you said, they're putting out so many fires. This is just another fire. And a lot of times it's just, hey, how can I put this out the quickest? And unfortunately, it's one of these things that gets swept under the rug, and they end up overpaying. Would you agree?
I would completely agree because they don't understand what the auditing process is all about. I mean, it's a little bit of both. Absolutely. They just have to
Yeah.
learn exactly how to do the audit.
Yeah, and again, so I think that's great that you've put together your 7 secrets that you want to share with us today. So, as I told you before, I'm kind of a no BS kind of guy. So if it's okay with you, let's just dive into these money saving secrets you put together. And like I said, the first one, the secret number 1 you talked about. Tell us about we see this a lot of times where the business owner, again, going back to what we talked about, they're wearing too many hats, and they delegate these audits to either a bookkeeper or a CPA. What's the problem you see with that?
Okay, big problem. So first of all, if the owner is not familiar with the records, I don't have a problem with them getting the records from the accountant because it's actually easier if they don't know what I was saying, what a New York State 45 is, 940 and 941. They don't know what a Form 1120 is because that's not their business. They're out doing landscaping or construction. They don't really care what it is. So they have their accountant do it. So if you want to get the records from the accountant, that's fine. But here is the problem. I get a payroll summary and I've got 30, 40 employees. And I've got one code on my work order, my case work order. So the payroll summary looks great, and they're a landscaping company. So clearly, I'm going to put everybody in landscaping. And end of story. So guess what? $40,000 to $60,000 are clerical employees. So that insured just lost a bunch of money because $40,000, $50,000, $60,000 should have came out of that, say $300,000. So they're paying on the clerical employees. They are now in the landscaping code. The insured never knows, and this goes on and on and on until someone catches it. And I say, hey, at an exit interview, do you have any clerical? Do you have any office? Oh yeah, I've got 7 or 8 of them. And then, so you're looking at a premium. You could have saved 10, 15,000 bucks. Just take 4 minutes and tell me, put an O for office. And then I'm going to know that everybody else is in landscaping. It takes 2 minutes, 3 minutes. Just review the employees real quick.
Yeah. And again, I think the bottom line is, look, your CPA or your accountant, they know numbers, but they don't know your business like you do. And they don't know who your employees are, what they do, nor do they care,
No.
and I've seen exactly these horror stories you're talking about because we get it on the back end. We'll get an audit come through and it's an increase in premium by $15,000. And, I'll go back to the owner and I'll say, who did this audit? And they'll say, I sent it to my CPA. And we have to clean up so many audits that get messed up by the CPA or the accountant. And I always tell my client, I'm like, listen, not only that, you're paying the CPA or the accountant money to do this, and then they're doing it wrong. So, this is not something, and Jodi, I just want your opinion. I just don't think this is something you can delegate to an outside party. What are your thoughts?
Unless the accountant knows that business like the back side of his hand, if they're friends, they've been doing their books for years and years and years and years. But I feel that the insured should at least look at the employees and make sure that they're classed correctly, because if they don't, they are going to hurt themselves. They're going to pay extra premium, and then I'll get a re-audit from that somebody did, and I got to clean up the mess because the auditor never did an exit interview. So
right.
You've got to do an exit interview if it's a new audit, a new client. Just make sure the employees are classed correctly, or maybe I have to add a new code. What if landscapers, and then the clerical? What if I have to add outside sales? That's an inexpensive code. So why should that outside salesperson go in landscaping. They shouldn't, and the insured shouldn't have to pay for it. So
Yeah.
very important to
Great
review.
point.
Yep.
Yeah, great point. So again, just, to summarize, like we talked about, secret number one, just be careful, when you're delegating this stuff. It's okay to get the records from your CPA or accountant, but put a second set of eyes on it and make sure those records are detailed, and that should take away a lot of paying too much money and annoying audits going back and forth. So thank you for that. That's great.
Right.
Secret number two, you talked about payroll reports and the dates not coinciding with the audit period. Talk about that.
All right, there's 3 issues with this. And again, the insured's going to hurt themselves. If I have an audit from September 16th, 20 to September 16th, 21, and the insured says, well, it's only a couple weeks. It's going to be easier if I just give them 10/1/20 to 10/1/21. It's only 2-3 weeks off. What's the big deal? I said, okay, the audit's due. So I write the audit up. For the October 20 to 21, and it comes out to $215,000. Okay, everybody's happy. Great audit. So the insured forgot to remember that he had a huge commercial job the end of September. So those wages were put into an audited term that shouldn't have gone there. So let's pretend he gave me the correct records, 9/16/20 to 9/16/21. Well, guess what? Payroll exposure is $200,000. So they couldn't take the extra time to put in the correct dates because they forgot that they had a big construction job the last couple weeks of September. So they just won themselves $15,000 in extra premium. There you have it. And they're fine with that. So $15,000 on payroll exposure, depending on what code you're in. I mean, it could be excavation, it could be carpentry, commercial carpentry. That's a lot of money to pay on. So very big problem. It doesn't hurt the auditor, but it hurts the insured. So it's just very important because they're going to hurt themselves, and then they're not even going to know it. So
yeah,
very important.
No, that's huge, Jodi. That's huge. So again, bottom line is make sure if your policy period runs from October 1st, 21 to October 1st, 22, your payroll reports must match the date exactly to your work comp policy, 10/1 to 10/1. And if they're off a little bit, you're going to overpay. So,
Yep.
accurate reports are the key to this. So that's great. That's great information. That kind of leads into your secret number 3 here. And I've seen this so many times, you touched on it, but payroll reports and accurate duties and classifications. Talk to us about that.
Okay, this is a fun one. Sometimes I get this all the time. They'll just send me like a paychecks report, and of course, paychecks, they don't classify the employees. They just put up, 39, 40 employees, and my work order has residential carpentry and clerical and outside sales and excavation and plumbing and electrical. So Gordon, I have good intuition, I do, but I'm not psychic. So I have to know what the employee's job duties are. Like I said, write down residential, commercial, carpentry, write down office, write down outside sales, write down electrical, plumbing. I've got to know where to place them, because if you don't tell me, per New York manual rules, if you don't tell me where they go, I can take the highest rated classification, which in this case would be excavation, and I get to put all of your employees in the highest rated code because you didn't have the time to review the employee's job duties. And you know what? If you don't know where an employee goes, they go to the highest rated code, and then you get a whopping premium, a whopping bill, and then you're going to dispute the audit, and then we got to open it back up. And then what's the problem? The auditor has to reopen the audit because I don't know where to place the employee. And you're stuck with a big bill. So then we got to bother the insurance company, got to bother you, got to bother the auditor, and we got to, it puts work on everyone. Just tell me where the employees go, because it's going to be a mess. It's very simple. It takes 4, 5, 10 minutes, depending on how many employees you have. And it just makes things so much easier.
So Jodi, do you think also, we talk about the fear of the unknown. Do you think sometimes that the business owner may be afraid also that if they tell you that John does X, but that's really not the business that they're in, are they afraid that, they're going to pay more? Do you think that's why sometimes that they're apprehensive to detail this out?
Absolutely. A lot of people would get nervous when I came in, because let's say they've got a bunch of stuff going on, but the guy in the yard also cuts trees, or he's also doing landscaping, and they're already paying a lot in general liability and workman's comp. So they're petrified to tell me, well, he doesn't only do carpentry, but he also does excavation. So they're petrified because they don't want the rates to go up. I mean, there's an option to that. It's called interchange of labor. So it's okay if your employee does a little excavation, he does a little carpentry, he does a little bit of everything. It's okay. Don't be scared. All you have to do is in your payroll records, when you call it in, say, hey, Johnny, he did 8 hours today in landscaping, and then on Tuesday he did 4 hours excavation, and then the day after he decided to do a little bit more residential carpentry. As long as you do interchange of labor and the auditor can see it in the records, you've got to document it. How many hours were worked in excavation? How many hours worked in carpentry? It's called interchange of labor. If you can prove that in your payroll records, then I can assign them to that particular code that you have interchange of labor. If the guy does excavation and they're scared to tell me he does carpentry, you're going to go in the excavation code. So it's very simple. Just when you call the hours in, just tell them Johnny did this or Johnny did that. And then when I do the audit, I'll put in Johnny twice. Johnny for excavation, Johnny for residential carpentry, and maybe Johnny for a little commercial carpentry.
Yeah.
Yep. And that saves money. But yeah, I think a lot of it has to do with them being frightened to get paid, to get charged more.
Yeah. Yeah. And again, that to me is huge, this interchange of labor. So I hope everybody's writing that down, and that's a big thing, because listen, as a business owner, things change. You're out at a job and someone says, hey, can you do this? And yeah, you can, and you're going to make $15,000-$20,000 by taking the job. Look, we just came through, this COVID, and right now everybody's hungry to make money. So look, I get it, and if there's opportunities out there, I always just say, look, call my office and say, hey, I got the opportunity to do this job. How's the effect going to be on the insurance? And we can make sure that you're protected properly, tell you how much the cost is going to be. But look, at the end of the day, you're in business to make money, and we want to be there to, help protect you along the way. And Jodi's advice here with this interchange of labor is great. So that's awesome. And this kind of leads exactly into your next secret there. And we get this question all the time. And I was hoping you could explain in layman's terms how this New York construction industry payroll limitation program works, because it's like physics. So if you could break it down in layman's terms, and because I know a lot of employers don't take advantage of this, and again, they're overpaying as a result. So Jodi, explain this one to us.
All right, New York State construction payroll limitation. To keep it simple, everyone struggles with this. It's the New York State cap. That's what it is. New York State cap. So number one, with the New York State cap, you have to have commercial work. So if you are all commercial, company, you're good to go. If you have residential, I cannot do a New York cap, a payroll limitation, unless you separate your residential from your commercial. It has to be shown in the records. I don't care if you go down and put an R for residential, C for commercial. I have to know what the commercial is. That's number one. Okay, so separate residential from commercial. Number two, it is per week. You have to have payroll records per week. Okay, because I have to calculate each employee for that week. Now, what you do is if the New York State cap is say 1594.57, which it is, the New York State cap changes every year on 7/1. So every July 1st, the New York State cap is going to change. So keep that in mind. So I'll run down through you real quick. I'll keep it as simple as possible. So I'm going to go through your records and I'm going to see the weekly payroll. So I'm going to take Joe Smith and I'm going to see his wages. They're like, say, $1,800. Now, Joe had $60 in overtime. Okay. So I have to deduct that, but I don't deduct the whole thing. It's got to be 1.5. So 1.5, you divide it by 3, you're looking at $20. Okay, great. So now we've got the gross wages of 1,800 minus the $20. You get your total wages, $1,780. Fabulous. The cap is 1594.57. All you do is deduct the cap from the total wages that the overtime was deducted from, and then you have like 185.43 left. That $185.43 is coming off that big check of 1,800. So I go down every single week and I calculate this for every single employee that worked on a commercial job, and I'm going to calculate on how much I can take off from the gross wages. So if you have $300,000 in gross wages and 150,000 of that, or even 20,000, 30,000, 80,000 can come off from that 300,000, it's going to be well worth it because you don't have to pay premium on that. So a lot of people don't like to do it just because it's time consuming, but you know what? Keep weekly records. If you can separate the residential and commercial, for me, I will go down through your audit and I will do it for you. Some people like to do it themselves. And if that's the case, I can also take another approach. I'll go through and I'll look at your weekly reports and I'll grab the employee and I'll go through random employees and say, okay, they're right. But this saves so much money. And I just did one last week. And it was only $8,000, but $8,000 is a lot of money when you take $8,000 of payroll exposure and you put it in a carpentry code. Very, very important. It's not hard. So quick synopsis, you take the week, the employee, the gross wages minus the premium overtime, and then deduct the New York State cap, whatever it is for your audited term, and then whatever is left is what I am going to deduct from your gross wages. That's it. It's not that difficult. It's easy. It's just time consuming, but it'll put a lot of money in your pocket. So
yeah, that again, I always tell people I'm a dumb hockey player, and you explain that very, very well, and I think, you know, for all of our clients, that's very easy. And like you said, you know, look, $50,000 that can come out of your workers' comp just by keeping accurate records, that's a no-brainer. That's real money. You know, on a $10 rate, that's $5,000 a year saving. So, you know, and again, look, if you're using a payroll company, it's so easy to do this. When you report it, you just break it out, and then that just makes Jodi's job easier on the back end. So, again, just all comes back to the same thing. Just if you put in a little bit of extra time on the front end, you'll save thousands of dollars on the back end. So great stuff there. And so Jodi, this kind of leads in another pain point. I'm sure it's as painful for you, but let's talk about the dreaded subcontractor 1099 employees and not getting certificates.
Okay, certificate of insurance. All right. If I was a business owner, for the life of me, I don't know why someone would not collect the certs. So,
well, I think it goes back to the same thing, right? It's just we're wearing too many hats, and it seems to be these little things that slip through the cracks, but these little things can be time bombs, because the money on the back end, when you get whacked, it's huge, and I feel terrible for our clients, because they're trying to do the right thing, and some sub, they let him on the job, and he's like, oh yeah, I've got comp, and come out of time, here he comes, we get a cert, and he's got liability to no comp, and the client gets whacked, and it's terrible. So yeah, let's talk about that a little bit.
All right, what I want to say about this is all the insureds, before you let the subcontractor work, make sure you get the certificate of insurance, because I have seen it so many times where their insurance, their cert relapses, or they forgot to make a payment and they didn't have it at the time. Just make sure to get the cert before they work. It doesn't matter on my end. I mean, if you don't want to give the cert, then guess what? You are going to get charged for it. So if you've got 15 subs and you give me the certs, and half of them are workman's comp and half are general liability, some of the wrong date, I mean, come on. Get the correct cert. Are you doing a workman's comp audit? Are you doing a general liability audit? Are you doing both? Make sure if it's a workman's comp, you give me a workman's comp cert. Don't give me a general liability, because it's not gonna go through, and vice versa. And if it's both, make sure that you have both certs for the sub. And if you don't, I'll work with you. Some auditors don't, but I always do. And we have 24 to 48 hours for the insured to collect the certification. Okay. And if you don't give me that cert, and you've got 7 subs that are in plumbing, electrical, masonry, carpentry, guess what? I am going to add that code to your audit, and you will be charged for that. And then you're going to get upset. Say, well, I sent her all my certificates, and I don't know why I'm being charged. Well, let's review this. First of all, you gave me the one with wrong dates. You gave me 2019, we're in 2021. You gave me a general liability, and it's a workman's comp. And this one, same thing, general liability, and it's a workman's comp. And then the rest of them, you didn't even bother to send me. So why do you not have certs? You should have them before you hire the subcontractor. And then the subcontractor and the insured get in a squall because the insured's mad at the sub because they got charged $400, $800. And then they want the subcontractor to pay for it because it's not fair. So let's just squash it and get the certificate of insurance before they work. And then you don't have to worry about it. Throw it in a little folder and put the amount you paid on them. I mean, real simple, but that's New York manual rule. You've got to have a valid certificate of insurance. If you don't, you will be charged. That's just the way it is. So I would get the copies before you let them work. It would make things a lot easier.
And just to piggyback on that, Jodi, what we do as well at Quinton Insurance for all our clients is that we tell them, listen, all you have to do when that cert comes in, you can email that over to certs@quintoninsurance.com. We'll review every cert for every one of your subs to make sure the data is accurate and they have the coverages that they need in order to get on the job site with you. So please take advantage of that. The other thing is we also have a few vendors that we work with for larger contractors that will monitor these certificates for you. And, you know, if a certificate is not accurate, you know, the software will kick it out. And so we've got a lot of software companies we work for that can do that for you as well, that can really take a lot of pain off you. Because listen, you know, I've seen horror stories, Jodi's seen horror stories where, you know, you're paying $30, $40, $50,000 extra in insurance costs as a result of these uninsured subs. So just take advantage of what we offer there and listen to what Jodi said, and, you know, let's just take away the pain. So thank you, Jodi. That was fantastic. And again, it's almost like this was scripted, but this kind of leads into the next one where we see this before. So an executive officer of the company, okay, the business owner of the company is listed under code 8809. And unfortunately, like I said, as a business owner, you're wearing multiple hats. So that business owner decides that he's going to jump in a dump truck one day, or he decides that one of his guys gets sick and he's going up on a ladder to do electrical work or whatever, and he's working in the trenches. Talk about how that affects the workers' comp and the audits.
Oh, I have a real life story on this one. So
great.
I'll give you an example. So an executive officer, he or she, they have to be exclusively in the office. You do not leave that office to go out into the trenches. So if you get an executive officer who decides to go to a job site doing a 2-story dwelling home, putting some siding on, he gets up on a ladder, the ladder breaks, he gets a concussion, he breaks his leg or ankle, and it's kind of a problem. So he calls the insurance company, says, hey, I have an issue. I'm putting a claim in. I've got some major hospital bills, and I fell off a ladder. Insurance company says, okay, let me take a look here. And they say, so you're in 8809 and you were on a ladder at a job site and you want us to pay for you? Is that right? When you were up on a ladder and got a concussion and broke your leg? Says right here, you're in 8809. What's going on? It's going to be like pulling teeth to get money out, because they're not going to. I mean, it's going to be terrible. So now the executive officer can't work, and all you had to do was say, hey, I am the officer, but I'm out in the field a good majority of time. So now he's out 8, 9, 10 grand or whatever the bill is, and he's not going to win. And I know that this happens for a fact because real life story. I went to a mechanic shop a couple of years ago, and I've done their audit for years. And the guys, he's just freaking out on me. I'm like, what's the problem? He's like, you got to help me. I said, well, what happened? It's like, I cut my finger and it's really bad, and my wrist or whatever it was. I got a bill for almost 10 grand, and we put a claim in 8 months ago. The insurance company's not paying my claim. I said, well, how'd you cut your finger? You've been in clerical the past couple years. Well, I do clerical. I'm like, you told me you work at the front desk. Well, yeah, I mean, I do, but I mean, I go out in the shop and help the boys, you know, I mean, they're my friends. Okay. So you're crying over insurance companies not paying your claim, but yet you lied to me and told me that you were clerical, and you're wondering why you're not getting your almost 10 grand? Because you're not supposed to be out with shop exposure, and you were messing around with something and you cut your hand or you cut your finger, and now you're asking for my help when you didn't tell me that you also worked in the shop. Had you just told me the truth, then guess what? You probably would have got some of your medical bills paid. But you want to play that game? There you have it. So that's a real life story that happened about 3 years ago. And I felt bad for the guy. But yeah, you can't, I mean, that must have been one big paper clip cut dollar bill, you know? So.
Well, you know what, it goes back to, like you said at the beginning, right? Knowledge is power. So now we're sharing this information. And at the end of the day, look, if you're classified as an executive officer, you know, bottom line, you have to be in the office. You can't leave the office. If you do other duties, you know, you're painting or you're, you know, whatever it is, you've got to fall under that class code if you want to get paid. So
Yeah.
bottom line, it's, you know, I still say to today, it's, you know, workers' comp even is cheap. It's still cheaper than disability insurance. So, you know, whether that class code is 8009 or sales or whatever, it's still worth carrying the insurance for, you know?
Absolutely. Absolutely. My Lord.
Well, Jodi, this has been great. I've got one question from Lisa in Albany. She asks, she's got a question here for you. She said, the past few years, all of my audits have been virtual and not in person. And she says, do you think they're as accurate as in-person audits?
Well, I believe that they can be if you do a thorough exit interview with your auditor. You need to review the employees with your auditor. You need to go over the policy estimates, get a good description of operations, get the duties. And I mean, I'm a virtual auditor now too. And I'm very thorough. I go over everything. Just don't let anything slip between the cracks. An exit interview is extremely important if you want accuracy. And just go over every single detail. And then you pretty much got the audit covered. So review the employees and you know, go over everything in detail. But I do. I think that they can be very accurate. If there's not an exit interview, it's a problem for me. I like to have exit interviews.
Yeah, and I think, you know, just to, you know, talk about the 7 secrets you shared here today, I think as long as, like you said, is if you prepare, whether it's an in-person or it's a virtual audit, as long as you're prepared and you do that exit interview, it should be the same either way. Would you agree?
Yeah. I just did an exit interview last week. And the accountant, here we go again, sent me the payroll reports, and they had them in the wrong code. And I was like, so here's what I got. I rolled down the employees real quick. And then the guy's like, oh, no. Billy Bob, whatever. He's actually clerical. I said, oh, well, he's got about $14,000 of wages here, and they put him in the shop. Oh, he said, no. He worked for me part-time. He's 100% clerical. I said, okay, well, guess what? I'm going to pull that $14,000 out of the shop code or whatever code he was in, and I'll put him in clerical. And now your payroll exposures is down. So before you were up a hair, and now you're down a little bit in the shop code. So thank you for that. And then I'm going to go ahead and remove that employee, and done deal. But exit interview, very important.
Jodi, that's great. And listen, I can't thank you on behalf of our clients and myself and the team. I can't thank you enough for doing this for us today. And then before I let you go, anything else, any other magic bullets that you want to share with our clients that can help them in terms of these audits beside the great stuff you've already shared with us? Yeah,
real quick, make sure that the officers they have the correct stock. I ran into a major problem, and there was a president and vice president. In New York State, if there's 2 presidents, in order to be excluded, one of them has to have at least 1% stock. In this situation, the president owned 100% stock, and the vice president owned 0% stock. And they had their exclusion endorsement, so they were supposed to be excluded. So the audit was rejected because per New York manual rules, it had to be 99 versus 1%. But they both were included and could not be excluded because of the stock ownership. make sure the stock ownership is not 100 and 0, and you are like doing excavation or carpentry.
Wow.
The woman got a $15,000 bill bill in the mail, and they went and changed it. So I said, well, she's like, what am I going to do? I said, you need for next year's audit, you better get your accountant involved. And I don't care what you got to do, but give the vice president even 1% share, or you're going to pay another $12,000, $15,000 next year. Change it.
Oh, that's horrible. That's horrible.
It's New York.
You talk about, while you're on that topic, talk about partnerships too, like where you've got more than 2 officers, or talk about that as well.
Partnership. Well,
not so much a partnership, but like if there's more than 2 officers, you want to explain that to everyone?
Okay, yeah. I mean, depending if you're dealing with a corporation, but I mean, if you're dealing with an LLC, then the members are automatically excluded unless they opt to be included, which doesn't really happen that much. A lot of my physicians will opt to be included in the code, but members, if you're an LLC, members, you by New York manual rules, you are excluded. If you're a corporation, and just like what I said with the 2 officers, make sure your stock is divvied out, or you're going to get charged a lot. If there's 3 or 4 officers, make sure that, I mean, you got to have your stock percentages right. Because sometimes an officer is inactive. So that means this is a big one, Gordon. Okay. If you have an inactive officer, sometimes the system will automatically go to $37,700 that they're charged. Guess what? If they're inactive, we only have to charge $100. And this slips through the cracks with a lot. So you've got 3 officers that are active, and 1 officer that's not. So they're going to get charged the minimum, which could be $114,400 or $37,700 for all 4 of them. But that 4th one, that's extra payroll exposure, and they should only be charged $100 if they're inactive. That's
good stuff.
Yep. It's
good stuff. That's great.
Sole proprietors obviously are they are excluded per manual rules. Partnerships, they can also be excluded. They have to have an exclusion endorsement. It's got to be on that work order, or they, like a LLC, they may opt in and be included, but they got to have that exclusion endorsement, and they're all different for the members and the sole proprietors and your corporations and your LLCs and your professional LLCs. So yeah, just something to keep in mind if one of your officers are inactive,
No, that's huge. Thank you so much for sharing that.
Yeah.
All right. Well, I think that's all the questions we have. Jodi, this was amazing as always. I knew you were gonna kill it. So thank you so much for sharing all this with our clients today. And I'll leave it with this. If anybody after the call, or you think of something tomorrow, you've got questions for Jodi, you can just email me at gordon@quintoninsurance.com, and I will get that over to Jodi, and then we'll get those answers back to you ASAP. So Jodi, once again, thank you so much for doing this, and I will speak to you soon.
All right. Thank you so much, Gordon. Thank you.
All right. Have a great day. Talk to you soon.
I will too.
Bye-bye.
Bye-bye.